Eric Mother with Mother.com with another Rethink video. Today we're going to be taking a look at BlackBerry, and we're going to be revisiting the subject of how some charts don't have consistency, either to the upside or to the downside, in terms of how the price is playing out. In terms of this weekly chart, you can see that this is a very volatile instrument. As you can see, a lot of choppiness, up, down, and then up, down, just very inconsistent price action. So this type of a chart here is always going to be risky, because it is not unlikely that once you buy the stock, for example, in this instant, it looks like the stock is breaking out. And on this day, you can see that there's a breakout above the prior weekly closing high. So it looked like everything was setting up for the stock to move higher with a nice price move above there. Just like we've discussed here, problem is that the stock has had a history of very volatile up-down action. So you never know whether it's going to be able to sustain a move. So even though it's breaking out, this one was always a question for me, because the last time we were trying to play this stock on a breakout was during this week here. And even though it spent some time above that price during the week, but by the conclusion of that week, the stock was down and would go on to lose some value before finally last night did jump up and was trading above the prior buy point. So again, you're seeing a breakout. In fact, if you take a look at the chart for the stock yesterday, at the end of yesterday's trading, you can see on the monthly, the stock did meet the minimum requirements, with the RSI moving to 3-year highs, which is very good. And we also see that the stock was also showing that the MACD were both above. MACDs were both above and trading at 3-year highs, and one of them was above zero there, and just about to move to 3-year highs. So the minimum requirement for the breakout was there. Again, the problem was this action. As you can also see on this monthly chart, this type of sustained up and down, losing value. For example, during this month, it gave back all the gains for that month only to close almost unchanged. And then this drops, big drops on a monthly chart. And again, another big drop. And you can see that here, lost all the gains for that month. And even here, lost the gains for the month, and also 3 months ago, lost all the gains for the month. If I show you yesterday's daily chart, this is how the daily closed, and it was up 29% for the day, but it came back to an area where it would not be surprising to see resistance. As you can see, the RSI had come back to a prior level where it's been stalling, so somewhere here. And if we draw a straight line, happens to be around 69.1, we can see that it did give us a short-term high in the middle of 2014. It came back and tagged that level on a daily chart, which was here, and subsequently dropped. And so yesterday's close was curious, because we know that the stock has a tendency of losing gains, and it closed precisely at about 69.1 on the daily. So the thinking was, this one could be a trap. Of course, we'll wait to see. Maybe it pulls back, maybe not, but the history of this one was a red flag. So we go to today's action after the close. You can see on the weekly chart now, just the next day, it has given back all the gains for the week and is now down for the week. That's on the weekly. If we take a look at the current monthly chart, again, for this month in 2 days, yesterday it closed up 29%. Today it gave back all those gains and is now down for the month. If we take a look at the daily, we can see that even though it closed at new daily closing highs, or 52-week daily closing highs, the subsequent move was for the next day, the stock to record a move where it was down almost 20%. And now we go back to the daily line of resistance that we had drawn, and we see that it is exactly where the stock has seen uniform action as it came to the line there, kissed it, and had a sharp reversal. So here, the idea is that, again, we are seeing why we should, as best as we can, avoid stocks that are showing tendencies of losing gains over a period of time. And BlackBerry is one of those stocks that has been doing that. If you are aware of that tendency of losing gains, you would have at least missed yesterday's move, and also you would have been out, since you would not have been in the name after today's down move. So this one would be one you would have avoided, because the volatility is just too much for anybody to stomach, and it's going to be very difficult for this stock to move higher, because it seems like over the last 3-4 years, every time it moves higher, it gets smacked down. So be on the lookout for stocks that have ugly charts, because you don't want them on your portfolio. Eric Mwathe, good luck, peace, and blessings. Woo!